Welcome to my YouTube channel. Today's video is going to be based on a scalping strategy for forex traders. This strategy, if properly mastered, you can use it to cash like minimum of 20 pips in every trade you decide to take. So for this strategy, the only indicator we're going to be using is the moving averages. Just one of the moving average, which is going to be set to period 50. Method is going to be exponential. Apply to close. Done. So if you are new to forex trading, please note that forex business is very risky, and there is possibility of you losing all your investment. So before you go into this business, make sure you've made your own research, study a lot about trading, and practice a lot on your demo accounts before you go live and invest with your real money. So back to the strategy, guys. In this strategy, the time frame to use is for analysis is the 1 hour time frame, and the entry time frame is the 15 minutes. So how do you trade with this moving average? You wait for a bullish candle to close above the 50 moving average on the H1 time frame. As you can see here, a bullish candle closed above the 50 MA. Now you wait for a pullback, and after the pullback you enter the trade for a buy. But you don't just take any pullback. This is where our second confluence of entry comes in. You wait for a pullback to a previous resistance zone that would hold as a support zone in future. So having seen this bullish candle close above your 50 moving average on the H1 time frame, you quickly switch over to 15 minutes time frame. On the 15 minutes time frame, you look for a previous resistance zone that could hold as a support zone in the future. So here we have this resistance zone holding as a support zone. Here you can see the rejection from the support zone and the 50 moving average in our entry time frame, which is 15 minutes. So I would have entered this trade immediately after this bullish candle closed. So entry would have been here at 1.210006. Exit would have been when I got 20 pips. Did I get it? Yes, 20 pips profit, and I'm out of this trade. So let's go back to our H1 to look for another setup. I already have all my setup marked up, so I'm just going to show you how we could have taken this trade. You can see here the H1 candle closed below the 50 moving average. What do you do after that? You go to the 15 minutes time frame. Go to the 15 minutes time frame. Okay. This rectangle marks the H1 candle that closed below the 50 moving average on the H1 chart. So right now you look for a previous support zone that could hold as a resistance zone in future. So we have this zone marked up as our previous support zone. Price pulled back to it, and you can see the rejections that occurred in that resistance zone. I would have taken an entry after this bearish candle. Did I get my 20 pips? 21.53. Yeah, got my 20 pips. Look for another entry. So here you can see a bullish candle closing above 50 moving average. What do? Go back to the 15 minutes time frame. That occurred on the 26th of January. So 15 minutes time frame, 26th of January. You can see it here. The rectangle marking the H1 candle that closed above 50 moving average on the H1 chart. So I haven't seen that you mark up a previous resistance zone that could hold as a future support zone. Because this term is also called the flip zone. Yeah, it's also what traders call flip zone. Previous supports turn into future resistance. Previous resistance turn into future support. So here we have a previous resistance turning to a future support. You can see the rejection. My entry would have been at the close of this bullish candle. Did I get my Did I get my 20 pips? That's 21.53, 21.63. No, I didn't get 20 pips. So this trade might have hit my stop loss or break even. But I suspect it would have been my break even. Whenever you enter a trade with this strategy and it has already moved to an extent, I'll advise you break even that trade. Okay, and let's look for another entry. Okay, there's one here on the 27th of January. You can see the bearish candle that closed below the 50 moving average. Now we go back to our entry time frame to look for pullback and entry. Okay, here we have a previous support which held as future resistance. Yeah, you can see the rejections. So my entry would have been after this close of this bearish candle, because this pattern is known as evening star. So I would have entered after the close of this bearish candle. Did I get my 20 pips? I entered at 20.84, 874, 64. Yes, I got my 20 pips and I'm out of that trade. Look for another setup. I have one here on the 1st of February. You can see the bearish candle closing below 50 moving average. Switch over to 15 minutes time frame. Okay, that was one we looked at just now. Okay, sorry. So we have another entry here, another setup on the 12th of February. You can see the bearish candle that closed below the 50 moving average. Switch over to 15 minutes time frame. Okay, this was kind of tricky. You notice this first support I marked was supposed to be our ideal entry position, but price didn't pull back up to that extent. Rather, it reacted to these previous support zones. Yeah, reacted to it, gave us rejection candle there. Gave us rejection candles here. My entry would have been after this bearish candle. Did I get my 20 pips? My entry is at 2106, 96, 86. Yeah, I got my 20 pips. Okay, then there's another setup here on the 16th of February. You can see the bearish candle that closed below 50 moving average. Go back to the 15 minutes. You can see price rejecting this support zone that turned to resistance. Sorry, my entry would have been here. Did I get my 20 pips? 2107, 97, 87. Yes, I got my 20 pips and I'm out of that trade. I think we still have one more setup. Yeah. Okay, this is the most recent setup. You can see the bearish candle closing below. Bearish candle that closed below the 50 moving average. Switch over to the 15 minutes time frame. You can see here was already marked up as our previous support zone, but price didn't react to it. Price didn't reject it. Rather, it pulled up to this most recent resistance zone, and price rejected it together with 50 moving average on the 15 minutes time frame. So my entry would have been after this candle. Did I get my 20 pips? 21.72, 62, 52. Yes, I got it. So that's my 20 pips. Okay guys, that's it for this strategy. That's everything you need to know about this daily 20 pips strategy. I have other videos in my private section of my YouTube channel. If you guys can get my subscribers to 500, I'm going to make those videos public. They are superb strategies. I mean, mind-blowing strategies for Forex and boom and crash, including VIX. Yeah. So guys, please hit the subscribe button and like this video and share it to your friends and to every social media trading platform you belong to. Thanks for watching. See you in the next video.